So at some point in our investing career, we were all what we would call a beginner. We didn't really know too much about investing. We just knew that you have the opportunity to take some money and turn it into more money. And throughout your journey, you've learned things that have helped benefit you, and you've made a lot of mistakes along the way. I sure as hell have, and I'm currently making mistakes as we speak, even though I've only been investing for maybe a year and a half or so, at least in a serious manner. So the mistakes is what the theme of this video is all about. Hopefully I can give you guys my opinion that's based off some of the mistakes I've made, and hopefully make you guys better investors, especially if you're a beginner like I once was. Let's get started. What's going on, guys? I'm Darren Jackson. Hopefully you're having a great day so far, and I wanted to use this video to talk a lot about mistakes. Since I've started this channel, I've talked more about a lot of the things I've learned that more so on the positive side, but making mistakes is also positive as well. That's how we grow as humans in any situation, especially when it comes to taking your funds with the goal of getting more funds. We all want to grow our income and create a legacy for ourselves and for our future, hopefully. But along the way, especially for me personally, with this year and a half of investing that I've had so far, I've made a lot of mistakes. And with that, there are some lessons and advice that I want to bring out to you guys. And before we get into this, just know that these are my personal opinions. I'm still learning, so a lot of the advice I may give may not be fully thought out in the hands from the opinion of an expert, but this is just what I've learned that's helped me to this point with the mindset that I have. I'm not a financial advisor at all. I'm just a YouTuber that is on a small channel that's just trying to help you guys out that may be starting like I once did a little over a year and a half ago. So let's get started. So I kind of put these lessons in a particular order. I feel like the last lesson I want to give you guys is the most important, at least in my opinion. But the first one, again, my opinion, is if you're starting off investing, there's a lot of different styles of investing that you can get into, that you can put money in and eventually get money out. But I would refrain from short-term investing strategies. Those are strategies such as swing trading and day trading and specific forms of options trading, especially if and I don't know a lot about options trading, but especially if it's for the short term. The reason why I say that is when you're analyzing stocks on a short-term basis, there's a lot of research that you're gonna have to do in the process to be able to gather a lot of information in a short period of time, especially when you're looking at these graphs or on these charts that you see every single day when you're looking at your individual stocks or you're looking at your entire portfolio that display how your stock is doing, whether it's diving because something happened and it's losing money per share, or it's gaining because something happened and it's gaining money per share. You have to be able to analytically understand every point within that. There's a level 2 market data option that you can get from Robinhood, but that costs extra money. And I'm pretty sure that's really helpful for day traders. But my advice is to put yourself in a position where you're in a minor volatile situation, even a dividend paying situation, to where you can put your money in a stock that you know is going to grow. It's had the experience of growing stuff, and those stocks are pretty easy to point out, and you can make money in the process with the dividends while you're doing research on those short terms. I would advise you guys not to start off with the short terms at the beginning. The second lesson I'm learning, and I'm still learning because it's pretty detailed, is to understand how taxes play when it comes to investing. So what I've learned is taxes are a big deal when it comes to investing. And if you do the research, even the lightest research, when I've done it, I've concluded that if you're a long-term investor, you're in a better situation tax-wise than if you're a short-term investor. So basically, and I'll put a chart up, basically your tax bracket is based off your income. So if you make maybe 40,000 or less, you have a smaller tax bracket. 40,000 and above, bigger tax bracket. So thinking about that and how long you're investing is actually going to determine how much you're taxed every year based off your stocks. And the longevity of it comes into play with, if you hold a stock for a year, you're gonna be taxed less whether you make 40,000 or less or 40,000 or more, versus if you hold a stock for a shorter period of time, like if you're doing swing trading or day trading, no matter if you make 40,000 or less or more, you're gonna be taxed more. Of course, obviously, if you are a long-term investor and you have a small income, you're gonna to be taxed the least amount. So keep in mind stuff like that, understand the tax bracket you're in, and understand your investing strategy and how that's going to impact how much you're taxed. Now, if you guys have any experience with watching my YouTube videos, first of all, thank you for being here. I really appreciate it. This is a really small channel. You guys are helping me grow, and I appreciate every subscriber I have. But anyway, if you guys are experienced with watching this channel, you guys know that I absolutely love dividend yielded stocks. I love being able to put my money into stocks that I know are gonna grow, but at the same time reap the benefits of the dividends, where I can then just reinvest it into stocks that I know are gonna grow. Circle of life. Love Lion King. But anyway, my third lesson is to don't solely focus on just the dividend yield. I've made that mistake so many times. I actually mentioned in a video, a brief example, when I bought 4 shares of IVR. It's an ETF, and this is the mindset I had, which is really crazy. I bought them for about $4 a share. So a little over $16 I spent for these 4 shares. And I don't remember the dividend yield. I think it was like 10 or 12%. And based off dividend.com, at the time they were paying, I think, 15 to 18 cents per share per month. So I'm thinking, that's almost $1 a month that I'm making for pretty cheap shares. And I also looked at their history and noticed that this stock was once $16 to $18. But what I didn't think about is, okay, why did this stock drop? And based off that reason, is that gonna affect the dividend yield? Well, sure enough, I didn't do enough research, and sure enough, it did. Each stock dropped a little over $1, and the dividend yield dropped from double digits to 3 cents a month. So I lost dividends and I lost capital gains. You have to do the research and focus beyond the dividend yield. Look at the PE ratio, look at the growth, understand why it's growing. Take a couple of steps forward before you make these decisions, because a quick money grab from dividends may not be worth it if you're losing gains, which could affect your dividends. The fourth lesson that I have, and again, this is a personal opinion, they're all personal opinions, but don't try to time the market. What I mean by that is we have this pandemic and it is making a hit on practically every sector, maybe besides technology. And when it makes its hit, there are people out there that are trying to time when the hit will end, AKA the cheapest price for a particular stock where it could be undervalued, and when the rise begins. Maybe there's highly experted people out there that could debunk my opinion, but I feel like it's practically impossible to be able to guess exactly when the bottom is. I mean, there's research you can do and you can make an educational guess and you still may not be right. And I get the whole point of that is to be able to buy it cheaper and reap the benefits of the gains. But my personal opinion, I wouldn't advise that, especially if you're a beginning investor, because I see it as time away from the market. If you feel like the stock isn't going down far enough yet and you don't want to invest yet, then that's less time you're giving your money to actually grow, even if it goes down negative a bit. Because first of all, you may be wrong that that's the bottom, but you may be right and you're giving your money opportunity to grow. And that's definitely important, because if you believe in the stock, it shouldn't matter when you invest in it. You know they're gonna grow either way, so just invest into it. And if you're really concerned about it, do something called dollar cost average. That's just putting a certain amount of money into the stock, whether it's a fractional share amount or just one share of stock at a time. You don't have to buy so many if you're really concerned that it's gonna drop or gain. But don't waste time and try not to guess when it's hit the bottom. And this lesson is something that I learned pretty quick in the very beginning of my investing career. And honestly, sometimes I make the mistake every now and then. And I feel like every investor does at some point, but leave emotion out of investing. You gotta leave emotion out of investing. And what I mean by that is there's some emotion that comes into play when you see a stock from a company that you have personal experience with. So like, for example, Trevor Hassel, a little shout out there. Make sure you check out his channel. I'll put the link at the bottom. Great investor. He made a video maybe a week or two prior to when this video comes out about some IPOs you should look into. And I think one of them was DoorDash. And I'm pretty sure he said he worked for DoorDash. He has experience with DoorDash. He understands what DoorDash is all about. He has that slight emotional attachment to it, but it's more so just thinking smartly and knowing, smartly, is that even a word? Thinking smart and understanding that based off the work ethic and based off what this company is all about and their overall mission statement and the situation we're in and the numbers behind it, this may be a good IPO to invest in. But you can't have so much emotion to it with investing in anything. So for example, if you have shares of Apple stock and for a day or two, they take a huge drop, like a 5% drop, don't just sell just because they took the 5% drop. That's ridiculous. That's emotion, because then you may have just lost the opportunity for a 10% gain and you just lost an extra 5%. Understand at least why that happened. If you do the research, that's leaving emotion out of it, then maybe it is a good reason to sell. But never invest with emotion. That is a huge ticket to losing a lot of money. If you can't leave emotion out of it, maybe you shouldn't invest, but that's just my personal opinion. Maybe it's too harsh, but it is what it is, guys. And those are 5 tips that I have for you guys. And again, I've only been doing this for a little under 2 years. There's a lot I'm still learning, so please leave comments on how you feel about those 5 tips. You guys have any more for me? You've seen my videos. If you have any advice for me, for each other, for yourselves that you're learning, please leave comments below. Make sure you watch some of these other videos, and hopefully, I really hope they help you guys on your investing journey as they have in mine. I appreciate you guys taking the time to watch this video, and until next time, take care.